Hey guys, welcome back to Unlimited Options Investing. In this video, we're going to be taking a look at the one stock that sticks out the most of this entire heat map, Tesla stock, the greenest one, up 3.34% so far on the day. We'll also be taking a look at the other big names, as well as this the time to be selling calls on our positions. Now that we've gone up so much over the past week, is now the time or is it not quite yet? Because we definitely don't want to stand in front of a moving train. Today is March 23rd, 2022, the 2-year anniversary of the March bottom during the pandemic in 2020. So taking a look at today, the other big name that we have that's green is Apple stock. We also have energy up today, having a good rebound after being pretty down over the past week. Otherwise, the rest of the market looking pretty red. Financials down, banks down. Adobe is down 10% on the day. The semiconductors aren't really doing anything, pretty much sideways. Software is down. And Home Depot down 3.46% and Lowe's down 2.71% on the day. All right, taking a look at Tesla, now at 1,011, pulling back from its intraday high just below 1,040. Currently at a market cap of $1.05 trillion. If we take a look at the past 5 days, for example, we are up 21.72%. Just a straight line moving up and right. Zooming out at the 1 month, we're actually up 32.39%, but again, most of those gains coming just in the last 5 days. And over the past 6 months, same idea, up 34%, but with wild swings as low as 750, all the way up above 1,200. And then falling back down to $900, going back up to 1,200, and then we all know how the last couple of months have been in the market. And this comes the same week that Elon Musk opens the delayed Gigafactory in Berlin. And what does the richest man on the world, other than tweet the most funniest things on Twitter, do? He dances. Never change, Elon. Never change. And looking at the candlesticks on the 4-hour time frame, ever since the second leg of the double bottom at around $750 over the past 10 days, green after green after green, going back above the moving averages, breaking through this overhead resistance at $900. And again, Tesla is the kind of stock that I look at in $50 increments, so 900, 950, 1,000, 1050, 1,100, so on and so on. So this line, for example, I could actually pull it down a little bit closer to around 750. The next area being at around $800, which makes sense. We see over here, we see support, 850, similar idea. Support, 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 support. At 900, even we traded here for quite a while. Support and the big gap up from October of 2021. And now that we've officially crossed about 1,000, then the next area is going to be around 1050, which we haven't yet been able to cross through. Now, obviously, Tesla, like every other stock, depends on sentiment overall in the markets, liquidity, all that fun stuff. That being said, though, Tesla will also do whatever it wants despite what the rest of the market is sometimes doing. We see that today, for example, with it being bright green, with the rest of the market, safe for Apple and energy, either sideways or pretty red. That being said, though, whenever a stock does this, goes parabolic in less than 10 trading days, climbing over 20% from 750 all the way up to over 1,000, you have to be cautiously optimistic. Would we be surprised if we saw some kind of pullback toward the moving averages around $900 and then continue moving up forward, taking 1 or 2 steps back and then moving forward 3, 4, 5 steps? Tesla being the volatile stock that it is, it wouldn't be surprising. Not necessarily saying that's going to happen, but it is definitely a possibility. It could definitely use a healthy pullback after such a monstrous run. You could obviously sell some of your shares, take some profit, and then buy lower if that's to happen. Not necessarily. Maybe tomorrow we're trading above 1050, 1100. Anything can happen. But the faster this runs up and the more it moons in the short term, the even more dangerous it becomes, especially if you're trading it short term. But let's assume we do get that pullback and we're resting right on that $900 mark. We're right at those moving averages. And knowing every $50 increment is some kind of psychological zone, whether for support or resistance, 900 wouldn't be a bad opportunity to add to your position, especially after this run-up. Another way we can take advantage of the volatility is by selling covered calls, especially weekly calls that expire this upcoming Friday. And not to mention that the RSI is technically overbought above an RSI of 70 at 76.43. And also, I want to take the time, if you haven't already, smash that like button. If you're new to the channel, welcome aboard. Hit that subscribe button. I've also linked below in the description my TikTok, my Twitter, and my Instagram page. I'm posting on all of them every day, so check it out. Heading over to Yahoo Finance, taking a look at the calls that expire this Friday on March 25th. We're going to be taking a look at open interest, and what that means is where are the most calls open right now that expire this Friday. So we click on that. And what do we notice? The most open interest is on the $1,000 strike, and then 1,100, 1050, 950, 900. So the first 5 are all, again, in those $50 increments. Now this is very dynamic. This is changing every second and gets updated every hour or 20 minutes or whatever it is. And I'm most definitely not a fan of selling in the money covered calls because that's way too risky for me. I personally like to sell calls that are out of the money, giving myself some kind of room in case Tesla does indeed keep moving up higher by the end of the week. I don't want to get stuck paying for someone's expensive Friday night dinner. But these are the kind of indicators you want to take a look at before you're selling calls. How much has the stock price gone up already? Has it gone up fast, violent? Is it likely to go down? But these are the kind of variables and indicators that you want to take a look at when you're looking at taking advantage of selling calls and taking advantage of that volatility. So to give you guys a quick example, if I were to sell the strike right now of 1100, that would be giving myself just under about a 10% cushion if Tesla was to keep on moving higher from 1016 all the way up to 1100. And I would be receiving $375 as a premium. If Tesla by the end of the week wasn't to reach 1100, I would be able to keep that entire 375, so it is a hedge in case Tesla were to go down from these current prices. But for example, if I wanted to be a lot riskier than I'm comfortable with and I sold the 1000 strike, if we were to expire on Friday below 1000, right now I'd be able to pocket about $3,400, but again, that's not a risk I'm willing to take at this time. It might very well work out, and maybe on Thursday and Friday we expire at 950, 975, 900, who knows? But again, not my cup of tea. And this goes, of course, beyond Tesla stock. I know it's a retail favorite, but it has done very, very well relative to other stocks in the past few days. For example, if we take a look at the QQQ, again, similar idea. This ETF has shown a lot of strength over the last 10 days. Albeit it hasn't been parabolic like Tesla, it still has been very strong. Even though we've had a little bit of a pullback today, it's healthy, but again, when are the sellers going to step up? We do have some resistance around 360 and around 370. Again, by the end of the week, how much more can we realistically go back up? S&P 500 is a similar idea. We're still going up pretty strong ever since that low on March 14th, but we do have some resistance around 450 and around 457, 460. Apple showing a lot of strength over the past few days, looking like the moving averages are going to cross on the 4-hour time frame. It looks like we'll have resistance around 173, close to where we are right now. If not, a definite resistance at around 175, 176. We may not necessarily get to those levels this week, however, they are key areas that we do have to take note of. Amazon, like I said in a previous video, needed to get above this neckline of about 3,300. We're now currently above that, but the real test will be above 3,400 in my opinion. If we're able to get above that, make way for Amazon stock, but again, we've gone up so much. Are we going to get a pullback first or continue shooting up higher? But then, for example, when you take a look at names like Google, or you take a look at Microsoft, or even Nvidia, although these names have done well over the past 10 days, they aren't going straight up the same way that Tesla is. They aren't too unattached from those moving averages because the further away they go, it's like an elastic band. The further away they go, the more they're going to shoot back once they do retract. Otherwise, that's the end of my video. Thank you very much for watching. As always, let me know in the comments below. Are you selling covered calls? Do you think Tesla will keep mooning? Is it going to pull back? Where will it expire by the end of the week? Let me know your ideas down below in the comments. Also follow my TikTok, my Instagram, and my Twitter, and I'll see you guys in the next video.